Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Right now, I've got Mr. Phil Streible joining me from the great state of Florida. Phil, I worry about Miami right now, the crypto capital of America. What's going on, man?
Wow, yeah, an incredible sell-off here, and it's a cascading effect on all these different asset classes, everything from the equities, the cryptos, the precious metals. No real safe haven out there. The one market that is interesting is that we saw 10-year treasury yields come off about 4.3%. They're sitting at about 4.22, and we're seeing a little bit of a bid here on 10 years.
That's a good point. Finally, someone bought bonds, right? Because the last few days, market had no interest in bonds. I think that's good eyes and an underappreciated story today, Phil.
Yeah, I mean, a lot of these like central banks have been protesting, or different governments have been protesting U.S. Treasuries and things like that. And perhaps you're seeing a larger liquidation where they're finally throwing in the towel and going back to their traditional asset classes. One thing to note on your chart on Bitcoin is I was looking at that peak that we saw right around that like 125, 127, and you come down to this latest breakdown right here. If you go a measured move on it, it's about a $45,000 drop. So you take that from where we just broke that key level of support. It really takes Bitcoin down to 40,000. So I know you got your 60 as your first stop, but just like taking the red line, the blue line, whatever, you get stops, all right, before you get your destination.
Okay, so take me through that again, how you calculate that distance, because I mean that's the great question here is, strategy. I mean, look, as long as this thing's trading under its break even, it is in serious trouble. But Bitcoin still is a separate asset that, obviously it's very linked to these things, but how do we kind of figure out where that price action might take us?
Go from that 127, wherever you got that top there, the very, very high of the chart, and drop it down to where your yellow line is, which is at 80 grand.
That's 80, yep. Okay, so about 45 or so, 47.50,
realistically,
something like
realistically, the neckline that I have drawn is where we broke it a couple days prior to that. So it's like 82, 84,000, somewhere up there where it broke. But if you take the distance from that head to that neckline, and then you draw that replication down, that's a measured move on the chart. And a lot of times that's how you see the process break out. So just basic technical analysis. And oftentimes keeping things really simple, I think is the best way to trade these markets, and just basic chart analysis, nothing too fancy.
Okay. So if 60 doesn't hold, then I mean, geez, who knows what's possible? But I would think, here's the thing: is there's other signs of appetite in this market. This SMH is up today. I mean, barely, but it's up. Nvidia was higher earlier. VIX at 20 is not screaming, disaster. We've had this steady climb in VIX now for better part of the, a couple months in the whole year. But if any of that kind of risk appetite stabilizes, then I would think BTC might find some support somewhere around that 60K as it realizes some of these, expected moves.
One thing that I did see was that, and I'm gonna have to verify this story, but it was like that Trump media group or whatever who holds a lot of Bitcoin, whatever his crypto asset portfolio. It was saying that it offloaded like something like $5 million in I don't know what the amount was, but it was quite a bit of Bitcoin that it was unloading. And if you get these large institutions or people that are just private holders of it giving up on this asset class, there may be no bid on there. And that's what we saw today, was no real rally in that particular asset whatsoever.
So there's no appetite for it right now. What do you make of the gold move and the silver move? Because silver is also getting blasted again today. You and I talked quite a bit these last couple of weeks about silver kind of assuming some of those Bitcoin volatility properties. Not a great bedfellow right now to be trading similar to this asset, but at least silver is at a level it was at the beginning of the month, and this kind of range now that we're developing after the big crash last week.
Yeah, that 69 and a quarter is going to be your critical level of support. I think if it breaks there, it opens up a wider move into the, the low 50s or whatever, but you really don't want to see it take out those lows. And realistically at 92, I think a lot of people were lucky to get some of their skin back. So they took some of the positions off there, and then it became this risk off cascading event across a lot of different markets here. And it's this breakdown that causes, these systematic meltdowns across these major asset classes. A lot of the momentum traders, and it's really been the momentum dying. You get shots across the bow with the NASDAQ here, with some of the cannibalism that's taken place with AI and CapEx spending between different companies. Feels like they're kind of attacking each other by trying to replace certain different things with AI. And then you get this breakdown in Bitcoin and then silver, and it's just the momentum trade is dying off right now.
Okay. When you look at the bond move, as you pointed out, catching a bit into bonds, dollar even as well. Obviously, the dollar bounce here is disrupting the commodity trade. You guys are kind of the experts in commodities. You guys know it as good as anybody I know from Blue Line. So is this dollar creating a problem? I do see on my chart potential resistance for the dollar right around here. So maybe that gives some hope for dip buying in gold, crude, silver, etc. Because even crude had a nice couple weeks there.
Yeah, crude oil has been at a pretty decent level, holding that $60 to $65 range. Geopolitics has been playing a role on that. We've also seen some of the inventories. The latest EIA inventory data showed another drawdown. We're sitting below the 5-year average as far as how much crude oil that the U.S. has at the moment versus the 5-year. The dollar index is near a resistance point. I wouldn't be surprised to see it give up some of its gains here. Because of the fact that we're seeing just this risk off and we're seeing yields come down with it. So we'll want to keep an eye on that. There were 2 central bank decisions out. I didn't catch the details on the ECB or the Bank of England, but realistically, again, once this risk off comes into play, some of these markets kind of find their new ranges here. Then you could come with a strategy. The volatility on a lot of different markets like silver and gold are still off the charts. And I got to tell these clients that it's like stepping outside your house just because it was sunny and warm and puppy dogs out there 2 days ago. There's an actual tornado outside. So you got to be prepared if you're going to trade some of these markets.
Okay. The preparation at this point, Phil, how does it incorporate the economic data in your mind? The ISM services was good. The ISM manufacturing was good. I do think that the jobless claims coming in a little bit above expectations is not a big deal. I think JOLTS too, given some of the government shutdown, it could be worse, these numbers. I don't really see the volatility in markets at this point being a referendum on the economy. What do you think?
110%. If you look at the economy on paper and you look at the global economy, I mean, it's doing great. Growth is accelerating. Companies are getting better. Yeah, there's some weakness in the labor market, and that's all going to shake itself out over time. You did have the lag on the data and everything from the government shutdown, but as far as economic growth is concerned in the economy, everything looks like it would paint a much different picture. Even earnings growth, with the bulk of the companies in the S&P exceeding analyst expectations. Russell growth is off the charts right now. So from that aspect, things are fine. Perhaps some of these assets are just a little bit frothy. I think there is some real back and forth action, some blows being back and forth in the NASDAQ between different companies like ServiceNow and things like Anthropic and everything. But the metals complex, perhaps a little bit over speculated in, and you're seeing a lot of these different exchanges, not only in the US, but globally, are raising margin requirements. So they're trying to bring this back down from orbit. And then the Bitcoin trade, well, that's just the whole nother story of deleveraging taking place.
Is there a potential macro-driven, is there a feedback loop, do you think, Phil? Like when household ownership of equities is at the all-time high, there was a lot of retail participation in, some of the crypto markets. Does this stuff, if it gets ugly enough, start to go back the other way? Or do you think the bubbles that we're popping right now, are they kind of cordoned off? Because I think to some extent the crypto world is like that. Like I was joking about Miami, but like there are very concentrated areas of these risks. I'm not sure if they expand out wider to the broader economy. And that's a view that I've kind of adapted over the years, because I think of, several years ago it might have had a bigger impact, but not since AI. You got the whole stock market moving on AI stuff now, maybe we just flip crypto off, continue on our way.
Yeah, the problem is the widespread adoption. I mean, I had never used crypto to buy anything in my life. I've speculated at many different times, and that's been the issue. One time, back when you were on your previous network, I was saying that crypto was useless, and you were telling me that, if somebody was having like if it was like a church group in another country that you needed to get them some funds, it was an easy way to do it. And that's
or an online poker ring.
Yeah. But I think that it just can't get its act together on what it's actually used for, and that's the problem there. At least I could take a gold or silver bar and hit someone in the head, or throw somebody, or use it as a doorstop.
I
just can't do that. I can't do that with Bitcoin. So that's the big problem there. When you're talking about some of these markets selling off that have done so well and bubbles are popping, one of the problems is that some of the participants that were not involved with the bubble when it was inflating are now trying to catch the bubble and catch the knife when it's falling. And, I've had a lot of people inquiring about XRP at like $1.18. Well, that thing is absolutely collapsed. It's down 23% today. It's down 35 cents. And if, you're going to put all your money in that's not a wise decision either.
How aggressively do you think it's worth going after the metals trade at this point, Phil? I wonder, as you see some of the AI themes or the software themes, the stuff that's been disrupted in the equity world that's been selling off really hard, I wonder which of these dips is more appealing. Like on the one hand, I look at the silver and the gold dip and I go, okay, that's been the momentum trade. I'm eager to scoop that up, but then I also wonder if that stuff, that doesn't generate cash flow, that doesn't generate earnings, I wonder if our backdrop for the economy is okay. Maybe I am better off taking a shot at some of the beat up equity stuff out there.
Well, if you're going to take a shot, like in the metal space, I think you just stick to the gold market, and you stick to copper, because if we get a snapback here and data centers, AI, things like that, you're going to see copper is the one that everyone needs here. Copper production, multi-year deficit, that's a problem right there. Silver, once it gets too high, it does face a degree of substitution risk. At what point would solar panels just be not worth it, or companies would look to, people aren't buying silverware because it costs too high, things like that. The gold market, at least gold is a tier 1 asset, so central banks can hold it, and it's good as cash. It's as good as bonds and things like that. So those are the two. The gold and the copper, I think, are the right ones. We'll see on the silver if some of the volatility comes out of it once the exchange launches the 100-ounce contract next week. But if I'm going to go and put my money in any of these indices, it's going to be the Russell 2000, because small caps aren't spending that CapEx spending. They're going to benefit if things sell off here, if yields come down. Small business optimism continues to grow. So I just think that, that's the logical place to be. It's also the last index that's still bullish trend, in my opinion.
Look at the regional banks, by the way. Very solid chart still. Just cruising through this kind of chaos in the other asset classes very smoothly. And to your point, IWM as well, pulling back for about a week or so, but a pretty clear trend still of higher highs and higher lows, a solid looking chart. And I like the reminder that gold is a tier 1 asset, maybe just gives you an opportunity to kind of retool your portfolio here, get rid of some of the stuff that's on shaky ground, and maybe take something from the last couple of years of what you've learned on how these things diversify each other, which is that Bitcoin is like risk with downside attached, and gold is diversification with upside attached. And maybe if you want something more gambly in there, then you dabble in a silver, or you dabble in maybe a copper that might have some higher volatility, or even maybe the small cap. So I love the perspective. Phil, you the man. Thank you very much, sir.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition. All information, communications, publications, and reports, including this specific material, used and distributed by Blue Line Futures LLC, shall be construed as or in the nature of a solicitation for entering into a futures transaction. Blue Line Futures LLC does not employ a research analyst or maintain a research department as defined in CFTC Regulation 1.71.